So, let's talk about money. That stuff you wish you had more of after you pay your rent. For centuries, it's been coins, paper, maybe a fancy seashell if you were trading a really long time ago. Then came plastic cards and we all thought, wow, this is the future. But the internet had other plans. It looked at our financial system. With its slow banks, its high fees, its we'll get to your transfer in 3 to 5 business days attitude. And said, I can do better. And just like that, the idea of digital money, or cryptocurrency, started bubbling up, promising a revolution for our wallets. It was a complete rethink of what money could be. This whole crazy story kicks off back in 2008. The world's financial system was having a bit of a meltdown, you might remember. Banks were failing, people were losing their homes, and trust in the whole system was at an all-time low. It was the perfect moment for a mysterious hero to swoop in. Or in this case, a mysterious geek. A person, or maybe a group of people nobody knows for sure, using the name Satoshi Nakamoto published a paper online. It was called Bitcoin, a peer-to-peer electronic cash system. It basically laid out a plan for a new kind of money that didn't need banks or governments to work. It was money for the people, by the people, powered by the internet. Now, Bitcoin was the OG, the pioneer, the one that walked so all the others could run. It introduced this wild idea called the blockchain. Think of it like a public notebook that everyone can see but no one can change. Every time someone sends or receives Bitcoin, it's recorded as a block and added to a chain. It's super secure because it's not stored in one place like a bank's server. It's spread out across thousands of computers worldwide. This decentralization meant no single person, company, or government could control it. It was a radical concept that took the power away from the traditional gatekeepers and put it directly into the hands of a global community of users. After Bitcoin proved this could actually work, the floodgates opened. It was like the first person to put pineapple on pizza. Suddenly, everyone had an opinion and a new recipe. Developers saw the potential and started creating their own digital coins, each with a different twist. Ethereum came along and added smart contracts, which are like little automated deals that run on the blockchain. Then you had thousands of others, from serious projects aiming to solve real-world problems to meme coins that started as a joke, but somehow became worth billions. This explosion of new currencies, often called altcoins, turned the crypto world into a vibrant, chaotic, and fascinating digital frontier. So why are people getting so excited about these digital coins? I mean, besides the chance to get rich overnight and then lose it all the next day. Well, one of the biggest selling points is speed. If you've ever tried to send money to a cousin in another country, you know the pain. You go to the bank, fill out a bunch of forms, pay a ridiculous fee, and then wait and wait and wait. With crypto, you can send money across the globe in minutes, sometimes seconds. It's like sending an email instead of mailing a letter. The transaction zips directly from your digital wallet to theirs, cutting out all the middlemen who slow things down and take a cut for themselves. And let's talk about those fees. The cost of moving money around the world is a massive industry. Banks, wire services, payment processors, they all take a little slice of the pie. For big corporations, it's a rounding error. But for a worker sending $100 home to their family, a $10 fee is a huge deal. That's a day's worth of food. Because cryptocurrencies operate on a decentralized network, the fees are often much, much lower. It's not about paying for a fancy bank building or a CEO's bonus, it's just a small fee to keep the network running. This makes a real difference for millions of people who rely on sending money back home. This brings us to one of the most powerful promises of crypto financial inclusion. Get this, there are nearly 2 billion people in the world who don't have a bank account. They're unbanked. This means they can't easily save, get a loan, or even receive digital payments. But you know what a lot of these people do have? A smartphone and an internet connection. With crypto, that's all you need to be your own bank. You can download a digital wallet, and suddenly, you have a secure place to store value and participate in the global economy. It's a way to leapfrog the old, inaccessible banking infrastructure and give people economic power they've never had before. Finally, there's the issue of privacy. Now this is a tricky one. With a bank, your financial life is an open book to them and by extension to the government. They know what you buy, where you shop, and how much you spend on late-night tacos. Cryptocurrencies offer a different level of privacy. While most transactions on blockchains like Bitcoin are public, they are also pseudonymous, tied to a digital address, not your personal name. It gives users more control over their financial data. This is especially important for people living under oppressive regimes, where a simple donation to the wrong group could land you in serious trouble. It provides a way to transact freely without fear of surveillance. Of course, whenever something new and disruptive comes along, you can be sure the people in charge will have something to say about it. And they have. Governments around the world are looking at crypto like a cat watching a laser pointer. They're fascinated, a little confused, and not sure if they should pounce on it or just watch it bounce off the walls. Some countries have embraced it, creating friendly regulations to attract crypto businesses. Others have been more skeptical, worried about its potential for illegal activities and its threat to their control over the money supply. It's a global debate and nobody seems to agree on the rules just yet. This uncertainty has led to one of crypto's biggest challenges: the insane price swings. The value of Bitcoin or other digital currencies can go to the moon one week and then crash back down to earth the next. One tweet from a famous billionaire can send prices soaring or tumbling. This volatility makes it a risky investment for the average person. It also makes it difficult to use as an everyday currency. Imagine buying a coffee and by the time you've finished it, the money you used to pay for it is worth double. Or half. It's not exactly stable, which is kind of the main thing you want from your money. Then there's the government's own version of crypto central bank digital currencies, or CBDCs. This is where things get really interesting. Instead of banning crypto, many governments, including China and the European Union, are thinking, why don't we make our own? A CBDC would be like a digital dollar or a digital euro, issued and backed by the central bank. It would have all the efficiency of crypto but with the stability and control of traditional money. For governments, it's the best of both worlds. For citizens, it could mean faster payments and benefits. But it also raises huge questions about government surveillance and the end of financial privacy. And we can't talk about crypto without mentioning the elephant in the server room: energy consumption. The process of mining new coins, especially for Bitcoin, uses a massive amount of electricity. We're talking about the same amount of power as entire countries. This has raised serious environmental concerns. How can we embrace a future of money that contributes to climate change? The good news is that the industry is aware of this. Newer cryptocurrencies are being designed to be way more energy efficient, and many Bitcoin miners are starting to switch to renewable energy sources. But it's a major hurdle that the crypto world has to clear to gain mainstream acceptance. So, where does all this leave us? Is crypto a passing fad, a digital tulip mania, or is it genuinely the future of finance? The honest answer is probably somewhere in the middle. It's unlikely that Bitcoin will completely replace the US dollar tomorrow. The system is still too complex for most people, the prices are too wild, and the regulators are still figuring out what to do. But the core ideas behind it, decentralization, user empowerment, and instant global payments, are too powerful to ignore. These concepts are not going back in the box. They have fundamentally challenged our understanding of what money can be and who should control it. The most likely future is one where digital and traditional finance learn to coexist and even work together. Your bank might start offering services to hold your crypto alongside your regular savings account. You could see a world where you use a stable, government-backed digital currency for your daily shopping, but you use a decentralized cryptocurrency like Bitcoin to send money to family overseas or as a long-term store of value like digital gold. It won't be an all-or-nothing switch, but a gradual blending of the old and the new, giving people more choices than ever before about how they manage their financial lives. The change is already happening. Major companies are starting to accept crypto payments. Financial institutions are investing billions. And a new generation that grew up with the internet is naturally more comfortable with the idea of digital native money. The real impact might not just be in how we pay for things, but in the new possibilities it unlocks. Think of artists selling their work directly to fans as NFTs, or communities creating their own local tokens to support small businesses. This technology is a building block for a more open, creative, and accessible financial world that we are only just beginning to imagine. Ultimately, the rise of digital currencies is a massive wake-up call to the traditional financial system. It's a loud and clear message that people want things to be faster, cheaper, and more open. Whether the final winner is Bitcoin, a government CBDC, or something that hasn't even been invented yet, one thing is certain: the conversation about money has changed forever. We are moving from a world of physical cash and slow bank transfers to one of instant digital value. So keep an eye on your digital wallet. The way you think about, spend, and save your money is in the middle of a major upgrade, and it's going to be fascinating to watch.